Great. We are now going to continue this conversation, particularly on one that's of really basic foundational import for fintech, which is, are digital economies more inclusive? You know, when you think about fintech, ultimately it works as a matter of digital code. And yet it's having a dramatic impact on economies, not only in developed countries, but also in developing countries, raising a range of interesting questions about how digitalization is transforming the business practices of small entrepreneurs and informal economies. And to have this kind of conversation, I am absolutely delighted to have three world-beating experts around the table, including Demetrios, who's going to be joining us from Visa. We have Sabine Mensah, who I've had the pleasure of talking to before, and she is the point person at the United Nations Capital Development Fund over in Africa, in Senegal, and Matt Saal from the International Finance Corporation. And it's good to see you as well again. Let's just start off with some basics, because this is a kind of conversation that is a little bit tech, a little bit economics, and a lot of international development. And it has, as a result, really a global reach, but it can get a bit into some of the institutional and sociological particulars of development. Maybe we'll start off with you, Matt. How would you rate the way that governments and countries are in this process of really transitioning to digital payments? I mean, we're in a COVID era, as many people know, and this is prompting, certainly in more developed countries, a movement to digital payments. But how is this looking when you try to compare sort of emerging economies, developing countries, and again, I'll call them more developed Western economies who don't always have the most developed payment systems?
No, we've seen a lot of paper checks floating around in some of the more developed economies that haven't transitioned to the same extent to mobile wallets, and a lot more prevalence of mobile money and mobile wallets in some other countries. We've seen countries from Brazil to Egypt to Rwanda ramping up cash transfers and focusing on electronic benefits. Sometimes it's cards, sometimes using mobile wallets, backing up the delivery channels to focus better on the data that's underlying to ensure that households are reached and limit the fraud. So, there's actually been quite a lot of diversity, and I don't want to get into questions of who's doing better or who's doing worse. I think the real question is, what are things that help become successful, and how do you best leverage technology to reach more people? And some of that starts with, in many countries, around digital ID. So, Togo, for example, had voter registration that they used to leverage to enroll people by phone into the emergency cash transfer system that they set up as part of the COVID response. Pakistan extended cash transfers to 94 million beneficiaries, leveraging national ID and phone channels. So that's out there, and it's possible to leverage it in creative ways and in ways that then, enable further usage. I mean, this could be an on-ramp to further digital activity by these individuals and by small businesses. And I think that's one of the things that we can potentially use this crisis to help leapfrog that development.
It's interesting. You are ever the International Finance Corporation, but there must be more diplomats there than at certain other international organizations, because we've had some pretty pointed comments made, even from other international organizations about about the fact that some countries, including the United States, isn't that far along in some of its payments infrastructures than others. I mean, we've had the BIS make that observation. We've also had throughout the course of the week, we've had the Patrick Njoroge, who was the head of the Kenyan Central Bank, talking about all of the advances that he's made in terms of, or Kenya has made in terms of digital payments, a year before Bitcoin was ever even invented. So certainly, even as an empirical matter, there are certain kinds of differences. But Sabine, I'll transition to you, and I'll assume that you too are more diplomatically inclined, being with the United Nations. So maybe I'll ask the question this way. what are the particular challenges that some regions may face when it comes to digitization that others may not face?
Fair enough. I would start by infrastructure. I think I'm based in Senegal and I cover West and Central Africa. And as we're going through the digitization path and looking at digitizing social payments and digitizing payments at large, one of the first or key barriers really is reaching the people we want to send the money to. And for those people to be able to access these services. Digital infrastructure is a challenge. If you go to the most rural areas in sub-Saharan Africa, typically the connectivity might be an issue. Or we even have some areas where, I remember actually how I had a project in Senegal where one of the agents actually literally had to go on a tree and put the phone, finding the right spot where it was actually going to connect so he can do a mobile money transaction. So I think digital infrastructure per se, both from a mobile connectivity and also access to a device, whether that is from the most basic phone to a smartphone or whatnot, or a computer, depending on where you are, that also is a barrier. And then there's even the fact of just electricity. Now, if you have the phone and you're connected to the mobile, the GSM grid, and you can't charge the damn phone, you're still excluded. And then I think Matthew mentioned identity. All of that is all good. But if you're not identified, you can't have an electronic account. Or if you can, in some of the areas where we are in West Africa, there is a KYC regime that would enable you to have access to a mobile wallet, even though you don't have the identity. And those are light wallets. But even that, the phone company will ask you to be identified anyway to get a SIM card. So all of the broad spectrum for us on digital infrastructure, from the basic mobile connectivity to identifying you and to having access to a device that you can charge, and actually understanding what's offered to you, or maybe yet going back way for the service provider to understand you as a customer and really make sure that the value proposition that's out there into digitizing the payment is really meeting your objective, your goals, it's accessible, affordable, and it's something that you can use. And if you have all of that combined, it's amazing how the adoption pathway it goes really fast, because it is something that is useful, that I want, and it's solving a problem for me. And this is very important for somebody who is vulnerable and walking and trying to make their life on $2 a day.
That is really interesting. And whenever someone talks about, particularly, when you're talking about Africa, but in other parts of the world as well, and even in some parts of the United States, when you talk about infrastructure, right, on the one hand, there's this very sort of physicality to this question of infrastructure, particularly when you're talking about parts of West Africa, where you're trying to figure out, well, how do you move money, based on infrastructure, where the roads are kind of tough. You're thinking about, well, okay, we don't have cables and infrastructure, but we have this possibility of transitioning to a digital infrastructure. But then, what are the dynamics of that digital infrastructure build? Demetrios, certainly you have a global vantage point as well. And you've seen really all over the world how that sort of design process, that design build can play itself out. Is that transition, what makes that transition easier and what makes it harder? Is it, and we've heard over the course of the day, is it culture? Is it a question of the regulatory questions? Or is it like literally a question of administrative challenges or resource based? I'll let you answer and then carry on.
Thank you, Chris, and congratulations for just an amazing week. It has been fabulous. I mean, everything I've seen and heard has just been, just completely amazing. So congrats. I think the easiest answer to that question is it's really a question of inclusion, and it's how do you ensure that people have access to the digital infrastructure that allows for the transformation to happen. we are really seeing this in particular with small businesses right now at Visa, the question of inclusion versus exclusion. And the pandemic has accelerated so many trends that we've seen in the payment space for quite a long time. One being the centrality of digital access because of e-commerce. And we've seen a transformation in weeks that probably would have taken years to happen otherwise. And small businesses that are digitally enabled are the ones that are the most successful and the most resilient, whether they're in Senegal or whether they're in New York. And what we're seeing is over 50% of small businesses are not digitally enabled, and as a result are really suffering because of the pandemic. And as we at Visa think about recovery, we're maniacally focused on how do we help foster the digital enablement of small businesses. Visa made a commitment a couple months ago to digitally enable 50 million small businesses over the course of the next 3 years. We're doing that in a whole variety of ways by creating online hubs, by deploying street teams to go from small business to small business in countries around the world to help get them online. We're partnering with groups like Mary Ellen Eskandarian's Women's World Banking to really try to close the gender gap with respect to digital enablement. We've been working with Matt on inclusive fintechs. We just had the announcement of this year's Inclusive Fintech 50, where we're working with fintechs who are actually trying to help small businesses make that transition to digital enablement. The Visa Foundation has come up with a package of $200 million to really focus on small and micro businesses as they make the recovery process, and we're really focusing more on women-owned small businesses. And then from a policy perspective, we're launching the Visa Economic Empowerment Institute, which is really our thought leadership piece to think about how we can use public policies to help promote inclusion as we work on small business recovery. So that was a long answer to a short question.
No, but what I find interesting and important, and something that's been really emphasized time and again, on all of the different ways in which we think about inclusion, right? Whether or not you're talking about as now literally just, it's not just development, but it's empowerment, right, of businesses and people when it comes to accessing basic financial services. When it comes to diversifying, literally like who's in rooms when it comes to devising financial regulatory policy and fintechs. When it comes to founders and VCs, I mean, what we're hearing over and over and over again is that it's a question of how do you address the ecosystem as a whole, right? And that if you're going to go in, there's no magic bullet. And if you want to do something, you have to sort of attack multiple areas at the same time in order to catalyze some kind of change, that makes, our economy ultimately globally just more inclusive. Sabine, I want to transition, when you hear what Matt's has sort of laid out, right? Looking at both the policy-making side, right? The identification of businesses and infrastructures to support in order to catalyze that small business creation and commerce. This is all, of course, still operating on especially in a COVID environment, on digital rails, right? You have the digital e-commerce and then the actual digital payment systems. When you look at economies that are transitioning even now to a digital economy, are there any particular segments, that tend to be more nimble than others? And just to put that into context, we had a great conversation. This was right before we had it with the Undersecretary of the Treasury Department. We had a conversation with a number of financial professionals, and we were talking about how in every country the actors involved in digital economics can be different. Some places it's more the tech, folks, sometimes the banking, financial institutions, sometimes it's the telecoms. Like, are there any kinds of things that in your experience that you sort of say, well, for whatever reason, when it comes to that transitioning to digital commerce, to digital payments, they tend to have it a little bit easier, or they happen to be a little bit more nimble?
That's a tough question, Chris.
That's why they call me professor.
I'm sure. At the United Nations Capital Development Fund, we make finance work for the poor. And we do so through that ecosystem view and making sure that we're working with different stakeholders, public stakeholders, the government, the regulators, the private sector, providers from banks, fintechs, mobile money providers, and startup, to also looking at how we partner with NGOs and academia, here right on, we are, to really build that ecosystem. And I don't know if you know, but I was reading last time the fact that when Ebola struck a couple of years ago, more people died because of the break in social services than from getting disease. And here we have COVID, a bit of a similar situation where it's a crisis and it's shocking all of us, and it came with confinement. And guess what? Millions of people in sub-Saharan Africa are on a cash-based economy. Those entrepreneurs, women, smallholder farmers in rural areas are working every day. And I mentioned earlier, $2 or less. These are people that are interfacing, and every day it's that face-to-face interaction that brings customer, and they're able to go back home with some of the resources and the assets that they're building. So in the confinement situation where we're all asked to stop home, what happened to our markets?
Yeah,
sorry, go ahead.
No, please.
No, I was going to say, this is where I think there's been an acceleration and the understanding today that, digital is indeed an accelerator. It provides a pathway for us to make sure that we're not leaving anyone behind. And for us, the UNCDF, it is critical. Inclusivity is in our DNA. Our digital strategy ambition to leaving no one behind in the digital era. And particularly when you mentioned the e-commerce platform, what we've done is not only work from an engagement at government level with digitizing payment. A lot of the governments are part of the Better Than Cash Alliance, which is hosted at UNCDF. So working with the government and helping that pathway with digitization of social payments and beyond. But on the private sector side, incentivizing the private sector, the fintech and the solution providers to actually bring these solutions with a lens of, I am trying to find that for that mother who's in the market and selling every day. And we've went through several calls for proposal and really pushing the incentive and saying, we want to see digital solutions for SMEs. We're very happy to say that in Ghana, for instance, we're partnering with MicroInsure, where it's actually digital insurance for SMEs that you can build just on your mobile phone. In Senegal, we have providers who have come up with tablets or smartphone that an entrepreneur can use and just put in all the transactions on the phone, and they're able to manage their business, and they're also able to have data that we can use in the financial sector to be able to provide them with additional resources. And we have e-commerce platforms that are really zoned down into the mom and pop shops, Jalo, for instance, in Senegal, and providing them a channel where my neighbor, my mom and pop shop, I just go on my phone and I order and it's delivered to me. That's what we have to do. In terms of inclusivity, it's really looking beyond you, me, or anybody who already have the infrastructure, but those who don't have it and are excluded and are in the informal sector, and see what we can do to make that transition to digital much easier.
Amen.
I mean, that's amazing. And I think that, again, when we have leaders on the ground, you're over in Senegal, and Matt, the IFC's mandate is quite interesting, both as sort of a fulcrum point for lots of these development issues, and from a strategy standpoint, again, what Sabine is very kindly mentioning to me is that it's not just a question of identifying what infrastructures are and are not there, but which ones can you sort of create, right? And I guess part of the analogy is, well, well, I was about to use a popular culture reference when at the end of Back to the Future Part 1, when they said, back up, Doc, we don't have enough road. And the answer from that Doc gives is, where we're going, we don't need road. I mean, there's a certain kind of sort of analogy here that's quite useful, actually, when thinking about, well, how do you build up that infrastructure? I mean, do you sort of leverage the road that you have, right? Or do you sort of build the new road? I mean, from the IFC, like, how do you guys go about strategically thinking that question through? I mean, is it about identifying the pressure points and where you have an absence, or is it about building out where you do have something and making sort of lemonade out of lemons?
Well, we like to say we're focused on creating markets, especially where they're absent. So we'll look to where the need is, but then you also need something to build on. I think it's paradoxical that notion that where we're going, there is no road, but we still might have to back up. Digitization still needs boots on the ground to scale and reach those who are currently excluded. Sabine mentioned the agent, reaching up to the sky over the tree. Why did you need that agent? You needed that agent because there's a certain amount of interaction that still requires that. So we may be building towards a future where there is no cash in, cash out, and all of it stays digital, because finance is fundamentally dematerializable. We can conceive of a world where nobody needs to actually handle anything other than their phone. And maybe that'll even be, voice controlled or thought controlled. But right now, to reach those people, we need those boots on the ground. And banking has, and financial services more generally, mobile money from telcos and others, has developed models for agent banking. And that helps to bring the digitization down into that last mile. And at IFC, we continue to work with people who are building that infrastructure, even though we recognize that in the future we see farther down the line, maybe you won't need agents, but we're not there yet. So we need to help people where they are today and enable them with the tools so that they'll get to that new place where you don't need the road. Just one quick thing. I'd like to thank Demetrios for the shout out to the Inclusive FinTech 50, which I was there at the birth with your colleague Mark Pickens when we set that up for 2 years ago or so for last year's cohort. So really nice to see that participation continuing. Over 400 fintechs participated in that competition, the results of which were announced earlier this week, and thanks to Visa for their partnership on that. I think when we look more broadly beyond just payments and the digitization of these small businesses, digitization of a range of economic activities, e-commerce was mentioned. There's so much that still needs to be built out. It's less about a question of which sectors are more nimble, then how do we provide the tools and the skills and the resources for all sectors to be as nimble as they can be. Earlier in the pandemic, some colleagues at World Bank did some flash surveys of small businesses in India and Mexico and a couple of other countries, and there was a surprising number who have pivoted their business. These individuals and entrepreneurs in these markets are incredibly nimble when they have to be, and when they can be, and when they have the skills and opportunities. And whether that was changing to, rather than going to the market to sell their vegetables, figuring out a way to connect through mobile phone to their customers, or whether it was pivoting their tailor business away from suits and towards masks, we saw a tremendous amount of vitality and flexibility. And the important thing is to give these people the tools to thrive in whatever environment, because the individual creativity of humanity is tremendous.
So I'm going to pick that up with you then and follow you down that line. I mean, in your experience, what actually do fintechs, particularly say in Africa, but other sort of emerging or developing countries, or regions, what do they need? What do fintechs need most from their local governments, in order to be successful?
I would say regulatory clarity is a pretty important one. A certain amount of flexibility, obviously, I don't want to say a permissive environment, but an environment which values a certain amount of experimentation as allowing new players to come into the space. provision of things like tiered KYC that Sabine mentioned, that enables service providers with limited types of services to attract a mass market. Interoperability and connectivity to payment systems is certainly useful. It's not always been necessary, but it certainly is one way to help. I'm sorry that the folks from Flutterwave couldn't speak from their perspective, so I'll speak a little bit on their behalf, as IFC is a big investor in emerging markets fintechs. But certainly the regulatory space to act, certain amount of certainty about the ability to build something and that they can use it, and you know, that infrastructure that we spoke about before, that ability to reach people, whether that's because there's power and telecom services, certainly critical to the spread of fintech as such.
And Chris, just to add to that, another key thing from our perspective is whether you're a small business or whether you're a new emerging fintech, you need access to cross-border data. And this is where governments sometimes shoot themselves and their small businesses in the feet when they close themselves down and restrict companies and small businesses and new fintechs in their markets from really being able to participate in cross-border data flows. There's a very worrying trend towards localization, and that has the perverse effect of cutting off small businesses from their ability to access cross-border trade, which is so essential to their ability to recover. And so when we look around the world, it's also very important to advocate for policies that government should implement that could really help buttress the recovery of small businesses and lay the foundations for a really thriving and vibrant fintech environment.
You know,
let me add something to that, if I may, and it's a little from a slightly different perspective, but that that move towards, let's say, data nationalism and localization of infrastructure is challenging for many smaller fintechs that want to scale and want to leverage the infrastructure that could be provided by some of the global cloud service providers. Not every country, certainly many of the countries that we work in, are not big enough to support the kind of secure data centers and large scale technology infrastructure that helps to drive down the cost of service and that enables these fintechs to create value propositions that are low cost and can reach more and more people. So if you bind everybody to use only a local, you know, a local service provider, that's not going to be operating at scale in some countries. And so that's another factor to take into account, not just this access to markets, but also what you do to the cost economics and how you begin to restrict the ability of innovators to nimbly address markets if they can't access you know, good technology infrastructure.
So we only have a couple. Sabine,
I have to jump in. I'm sorry, but I wanted to share with you what you and CDF were doing in terms of supporting regulator from a policy acceleration point of view. The regulatory environment has to be open and incubate these experimentation for fintechs to show what they're capable of, to find those solutions that we haven't thought about yet, or the ones that can be readily accessible and adopted by population. One of the major barriers that, and in my market, fintechs are facing is that the infrastructure again, but in this case, you have incumbents that have the infrastructure and the fintechs are bringing in solutions that they would like to put on top. The power of negotiation with these incumbents is not there. From a policy standpoint, competition laws, so that we are leveling the playing field and enabling these innovation experimentations to happen without having the burden to create another infrastructure because the incumbent has the power in that market and won't negotiate with you, is also one of the issues that are facing. And the other piece where government and national parties can do is actually walk the talk. use these innovations that fintechs are bringing. We're talking about digitizing payment, public-private partnership, leverage the private sector and leverage these solutions to provide the services. And then we'll make sure that we're really leveraging the strengths of all parties, government, infrastructure, and the fintech solution for the excluded, the marginalized population.
And that can be good business for the governments too. We've seen a number of countries where they've adopted, mobile tax payments, and it's actually, Mauritius reported a 12% increase in tax revenue in the year after the mobile payment facilities were adopted. In Tanzania, they saw new payers for personal and property taxes coming online after they were able to pay with mobile. That doesn't mean everybody is going to come on. There's some people who want to avoid or evade taxes, but for those who do want to be part of the formal economy, making it easy using these tools at the government level is a real boon.
Yeah, I think then, as I said, I want to end on a really important note. It sounds like an academic note, but it's really important in thinking through sort of the upsides of digitalization, and what it can get and what it can't get. And it's sort of this initial question that I asked about, whether or not an economy can go digital and still be informal. Or whether or not, what is the relationship? Is going digital or being a formal economy or formalization a prerequisite to digitalization, or vice versa? Or can they be entirely independent of one another? Demetrios, maybe I'll start with you and then have a go around to get your perspective.
Yeah, I think from our perspective, there are so many benefits to bringing transactions into the formal economy, including less poverty, more job security, the tax benefits, et cetera. And we've been, long promoting the transition through digitalization from the informal to the formal economy. But really, from our perspective, looking at this, now, it's really all about how do you enable small businesses? How do you get them to grow? How do you get them to recover? And how do you allow them to do that in the most inclusive way possible? And so for us, when we focus on digitalization, we really are focusing on it from the prism of inclusivity.
Yeah, Matt, digital or digitalization, formality, and informality.
Yeah, I think this also hits a little bit on some of the risks, which we didn't talk too much today, around some of the risks of digitization and the risks that a digital economy could exacerbate divides, not just the digital divides, but also divides in income, divides in access. And as economies accelerate and those who are connected get this sort of winner take all or winner take most kind of situations, does that ultimately exclude more people more severely than otherwise? And so this question of, what does it take to become formal? And can digitization actually reduce the barriers to formalization, as I mentioned in the tax example, but also, in terms of creating a new way of thinking about what formality means. We have a tiered KYC structure that affects the formality with which you participate in financial services. Could there be a tiered formalization structure in business registration or in other areas of activity that both enables people to participate and be registered or be partially formalized? And of course, there's a one philosophy might say, once you're known, once they know about you and are going to tax you and are going, then you're known, and there's no such thing as halfway. But we've shown in financial services, at least, that there are structures in which people can achieve a certain amount of participation without necessarily having to expend the resources or have to have all the skills or the ID or the capital to go, for the highest tier. And I think we'll move towards something like that in terms of formalization of business enterprises and other activities, and that'll be to the benefit. Maybe it'll be that your business doesn't have to pay taxes unless it reaches a certain amount, but you register at zero. Or maybe it'll be that you pay taxes, but you only register your business when you reach a certain amount. And how that plays out in different markets will depend on the culture and the types of businesses and the trust that a government can achieve with respect to its its population and its market, that they will, stick to the bargain there and appropriately allow people to be formal but not be penalized for being formal.
Sabine, you'll have the last word here. I mean, a very important note that Matt had made. It is and it has been a point of our conversation throughout the week, which is that we can exacerbate, or digitization exacerbates different, or can exacerbate certain kinds of trends, both within countries in terms of haves and have-nots, and sort of everything from superstar cities to individuals and countries. But when you get to this question about whether or not economies can be informal and digital, and what that means for these trade-offs, how do you view this? Oh, I think you're on mute.
I am so sorry. Yes, when I look at it, for me, is I always ask myself, and we ask ourselves the question at UNCDF. So, financial inclusion for what? Digitization for what? Mobile money for what? For us, it's really to empower each and every individual and businesses to achieve their own development goal and to contribute at large to the society where we live. So when we're talking about the informal economy, and in most of the, in Sub-Saharan Africa and West Africa particularly, the MSMEs that we're talking about are mainly informal. They are contributing, but digitization can help them contribute even more to the economy, contribute even more in terms of having new channels. So empowered to sell differently through e-commerce, empowered to offer their service, to collect payment real time right there. So they're able to use that for the next investment that they want to do. So for me, there's a careful question of, yes, we want the transition from cash digital because we know the overall benefits for the society and inclusion. Look at, between 10 years ago and now, digitization of financial services has enabled inclusion of millions of customers into the formal financial space. But yet at the same time, I feel in Sub-Saharan Africa that there is an incentive that government have to put in beyond digitization to bring the informal to the formal. And those are, for me, fiscal incentive. Make it something that an informal business owner will want to go formal because he has access to more revenue, because he is protected, because he can secure his asset, and because he has the training and the upskilling that's there provided for you to be able to do more and access new markets. If that incentive is there, yes, there's a reason for the informal businesses to come in. And I don't think it's just digitization. I think it's digitization of payments, digitization of services. There's a lot of investing into upskilling, reskilling the workforce, the informal tools that informal MSMEs can use, and then that fiscal incentive so that it's a win-win to be in the formal economy and contribute to the economies where we are. So.
Well, with that is fantastic, and it is now my time to wrap up both this panel and DC FinTech Week. We've had and still have thousands of people who've been watching in. I want to thank Visa, Demetrios. Also, shout out to you and your team. I want to thank all of our many sponsors and really all of the panelists, the participants, the central banks, the technologists, the lawyers, the regulators, the founders, and the trailblazers. It's been a wonderful, wonderful, wonderful experience. And there have been a couple of people, Abby, Lauren, Elaine, the people behind the scenes that only the panelists see, Kevin, who have just been indispensable in getting this off. It's a digital program spanning multiple continents, 4 days in a row, and we've never met in person once to do it. So I want to give my hat off to the team, and I'm really looking forward to continuing this conversation with everyone, and really working at the forefront of making sure that FinTech achieves the very high and lofty moral aspirations that it's put before itself. So with that, good evening or good morning, depending on where you may be. And until next year.